Let's spend a moment talking about income inequality, because what this pandemic has done is it's made the rich richer at a faster pace than before, and it's increased the number of poor, and the number of people who've slipped from the middle class to the poor, according to data put out by the Pew Research Foundation, has gone up. In fact, reducing India's middle class, according to a Pew projection, by about 32 million. Now, how do you see and assess what's being done to deal with the challenge of income inequality, and what further measures would you like to advocate?
Yeah, so this is a major concern. We have around 95 million who are estimated to have entered extreme poverty just in 2020. 50 million of that is in India. Now, as India recovers and as per capita incomes come back in India, of course, those numbers will shrink. But again, this is tied to my first point about the need for providing cash transfers and in-kind transfers that have to be continued because many people are in deep distress. Now, as the world economy grows, as you have recoveries come back, that itself will, of course, address the problem of poverty. But on the other hand, of course, government should pay very close attention to make sure that rural workers, urban poor, all of them have the jobs that they need to maintain their livelihoods. Again, we have to be worried about the hit to human capital that's coming from the loss in education for children, and especially for poorer households. That's a big hit to income inequality in terms of their prospects going forward. So again, there is a lot that still needs to be done on all these fronts.
So what is it specifically that you're advocating? Because what the pandemic has done is it's speeded up the process of digitization in most countries, and a lot more processes are automated than they were earlier, and that seems to be a trend that is now here to stay, which in a country like India with the kind of demography that we have creates a huge skilling challenge. Do you have any thoughts on what's being done and what more you'd like to see?
Indeed, with automation having accelerated, and digitalization, on the plus side, you can have improvements in productivity, but you certainly have some skilled classes losing out, and that is a big issue. The solution from around the world, if I'm just looking at experience, has been reskilling, retooling, giving hiring, very targeted hiring subsidies to firms so that they can attract some, kind of hire more workers, low-skilled workers, and then provide them training in-house. Those are the kinds of schemes that will be required. And again, kind of more emphasis on education, preparing for the technologies of the future. All of that will be needed. Now, it's not easy. Reskilling, retooling is easier said than done. But again, you'll have to just push on that front and figure out how to get more people skilled enough to adapt to the new kinds of technologies.
One of the biggest challenges coming out of the pandemic is to ensure that the non-performing assets of our banks don't skyrocket as some of the support measures provided by the RBI and the government are pulled back. Now, the financial stability report pulled out by the RBI says that in the extreme distress scenario, severe distress scenario, bank NPAs could rise from 7.5% in September 2020 to 14.8% in September 2021. How do you think we should approach this very delicate situation and prevent NPAs from spiraling?
So firstly, Rahul, I think you should think of this as quite the baseline, which is that it is very likely to happen that you will see an increase in non-performing loans. So ex ante, the steps that will be needed, of course, is sufficient loan provisioning for these kinds of loan losses that are very likely to happen. Raising more equity, maintaining more capital buffers in the banking sector. The government will probably need to plan for making more capital infusions into public sector banks. So again, I think this is a very real scenario that's likely. Now, the faster the recovery, the less non-performing loans are. But if you're going to, given what we're seeing in terms of the second wave, that's going to affect bottom lines for a while now. It's going to have effect on firms. And so again, I think these are some of the steps that I mentioned, which is in terms of provisioning for these expected loan losses, capital buffers, raising equity, government planning for capital infusion. All of this should be part of the plan.